do I invest it? How do I go about it? Or where do I put the money? That is what we're talking about today. It's all about investing. And if you're just meeting me, I'm Dr. Lina. I'm Doctor of Business. I help professionals turn their 9 to 5 into real wealth. You want to grow your money, it requires something called investing, right? That is what required, right? So welcome, welcome. If I have to invest $1,000, right? This is the exact plan. You want to learn. There's no guessing game. There's no hypes, right? There is no guessing game, no hypes. If I have to invest $1,000, this is exactly the steps that I would use. So welcome, share the live, invite your friends, tap out the live, and welcome. Buckle up, and because we are here on a ride today. Understanding one thing, if all you do, Teflon, welcome. If all you do is you get your income and you basically start using it towards, fun lifestyle, you realize that you are not going to grow it. So how then do you grow your wealth? Ensuring that it's been protected and ensuring that it is growing at the same time, right? That is what we're talking about today. Welcome, welcome, right? If I have to invest $1,000 today, here is the exact plan, the step by step that I would use to invest it. No guessing, no gambling, and of course, it's a simple strategy that actually builds wealth. So, welcome here and happy Wednesday, happy hump day. It's Wednesday already. Can you believe it? And it's almost the last day in the month of April, and then we go into May. How are we doing with those all those goals? Where are we on all those new year, new me? It's almost the half of the year. What are you doing about it? And if you have not registered for the Smart Investing Workshop, you have just very few seats left. Get registered, get ready, and be ready on Saturday. So if I had to invest $1,000, or do you think that $1,000 is too small? Hey, developer, Wale, how are you? If you feel that $1,000 is too small, right? You think it's too small, but that is actually money for you to start investing. If I have to invest $1,000 today, how am I going to invest it? Where am I going to put it? No guessing game. I'm not going to be guessing. Not a gambling game. Definitely not gambling, because you know that it's not until you get to the street of Las Vegas before you start gambling. You can actually be gambling in the stock market if you don't know what you're doing. You can be a gambling investor if you don't know what you're doing. Prophetess, welcome, and thank you all for sharing the live. Today, it's about if I had to invest $1,000, how do I go about it? The step by step that I'm going to use to invest that money, right? Because when I invest my money, that is when it grows. That's exactly what we want to talk about. So I'm going to be telling you step by step. So basically, why should you have your $1,000? Why should you just why should you not just spend it? Why should you invest it? That's because whenever you take your money and you just basically you take the money and you spend it on lifestyle, it's not growing, right? It's gone, right? It's almost like you got your money and of course you throw it away. However, what should you do instead? You take some of that money and you save it. So when you save it as well, there's something called inflation. Inflation is going to start eating out of that money, right? Inflation in the US right now is at 3.3%. That's what inflation is. So it means that for that $1,000, you're losing about 3 to 3.3% of that value. That's what you're basically doing, right? If you leave it in the savings account and you're losing the money to 3.3%, right? The fact that it's outside of your control, it's the economy, right? It is the economy, right? They actually forced the inflation to be at 2%, right? As a standard. But right now it's at 3.3%. You're losing money at 3.3%. But if you leave it in the bank, you are only getting 0.01% interest. That's all that you're getting. So it means that you are losing your money at 3.2999% every single year, right? And on top of the fact that you're not growing it, you are also losing your money. Yes, it might be safe, but you're losing money. So then how then do you keep your money safe? And how then do you ensure that it is not just safe, it is also growing, not losing value? That's why we are talking about investing. And a lot of times people always ask me, Dr. Lina, how do I invest? What does it take to invest? It requires a lot of money, right? I don't have that money, right? That's the reason why they are not investing. So let's keep it as simple. $1,000. That $1,000 can be $1, it can be $100. But for the purpose of this, if I have $1,000, how do I go about it, right? The exact system, the exact step. And let's keep, thank you all for tapping out the like. Thank you for the follow. Thank you for all of the, what's it called? For subscribing for those on YouTube side. Thank you for subscribing. Thank you for the follow. Awesome. So how do I invest $1,000? I have $1,000 today. How do I invest it? Without guessing, without gambling. It's a simple strategy that is going to help you build your money. And so I just want to know, how much do you think it takes? Just put in the comment. How much do you think you think it takes to start? You need to, you want to invest. How much do you think it takes for you to start investing? How much do you think is required? Do you think it's $1, $10, $100, $100,000, or your own currency? Put it there. How much do you think it requires whenever you hear investing? $25. Okay, all right. Okay. Who else again? Who else want to try? Developer Wale said $25. Yeah. What do you think it takes whenever you hear investing? What do you think is the minimum requirement for you to start investing? Somebody said $25. Developer said $25. Who else? How much do you think it takes? The minimum requirement when it comes to investing? $0, because God gave us the breath and lungs to speak to the Lord instead of money. Thank you so much. Yeah, $0. Okay, somebody said $0 on the YouTube side. Yeah, I'm still waiting. How much do you think it takes whenever you hear investing? And subscribe if you haven't. Follow if you haven't. We talk about, you're just meeting me for the first time. I'm Dr. Lina. I'm Doctor of Business and Technology. I help professionals turn their income from 9 to 5, grow it into real wealth, generational wealth. And that's what we're talking about today. How do you invest $1,000? And the first question is, how much do you think it requires to start investing? Zero is nothing. Okay, somebody says 0 is not. Sometimes it could be 100 if God bless you with the name of it. It's okay, but God has also given us the wisdom. He has blessed us enough so that he blesses the works of your hands. If there's nothing in your hands, there's nothing to bless. So understand that, all right? But okay, 0 means 0. Okay, perfect. So absolutely, developer, caller, welcome. And thank you all for tapping out the live. We try to get to 10,000 likes within the first 10 minutes. So if you can do that, that is absolutely amazing. And then 1,000 investing plan. That's what we're talking about today. No guessing, no gambling. You have $1,000 right now sitting in your bank account and you want to start investing. You don't want to know how. I'm going to be talking about this step by step. What is it? Okay, but thank you so much for that perspective. Thank you for subscribing. So great. So let's go straight into it. You can start with as little as $1. All right, what did I say? As little. So developer Wale, you are close to it, but you can, but divided by 5, divided by 25 of what you said. With as little as $1, you can start investing. Okay, you can definitely start investing with as little as $1. All right. So for every other person that is just joining, we're talking about how you can invest with $1,000. How, if you have $1,000 in your account, how do you invest? So you can invest with as little as $1. Gone are the days, you might be correct in the past, gone are the days where you need to buy the entire unit of a stock, right? Entire unit of a stock. So what does this mean? You want to invest in the stock market. You want to buy iPhone, Apple, right? You want to buy Apple. You want to buy the ownership of Apple. And because of that, in the past, whenever you want to buy, you have to pay the full amount of 1 unit of Apple stock, right? Which could range to, I'm not sure what it is today, right? The full amount could be 500, it could be 600, it could be 1,000. That is what you pay for. And then you own it as a full unit. But right now, in today's world, you don't need to, right? You really do not need to. Or what you can actually buy fractional shares. There's something called fractional shares. What does fractional shares mean? It simply means the dollar value. Instead of you buying the unit, you can actually buy the dollar value of that particular stock, right? Meaning you have $1. You can buy $1 worth of the unit, $1 worth of Apple stock, right? Meaning your $1 is what you're using, the dollar value versus the share value, right? You're not buying 1 unit of share, you're just buying the dollar value, which is a percentage of that particular share, which is absolutely beautiful. So if one of the things that you have been wondering before is, oh, you know what, it takes a lot to invest, I don't have money, if that's been your excuse in the past, well, sorry to bust your bubbles, you don't need so much. You can start with your $1, okay? You can start with your $1. And guess what? You don't need to start waiting till, oh, you know what? I don't have money, right? You don't need to wait till that time. Thank you for tapping out the live. You don't need to wait till like, oh, you know what? I need to have $50,000. I need to have $10,000. No, you can start as you are, right? Because understand one thing, one beautiful thing about the stock market, that it's the most important thing that people miss, is that people always forget the fact that the time that you're waiting, that time that you're waiting is actually money. Whenever they say time is money, in the stock market, it's exactly that. Time is money. The only thing that is stopping you, if you have 100,000 today, just using it hypothetically, the only thing that is stopping you from that your 100,000, not putting extra dollar on it, that your 100,000 to become over $1 million is just time. It's just 15-20 years. That's it. You do not put any extra money. It's just that 20. It's just that 100,000. But 100,000 plus 20 years, you have over $1 million, right? That is what is called the power of compounding, power of compound interest, right? But a lot of times we're never patient. We just want something that is quick, right? But 20 years might sound like a long time, but what does it take for you to double your money in less than 7 years in safe vehicles, right? That if you put it in ETF, you put it in index funds, right? Those are the ways you grow your money. Thank you all for tapping out the live, and everyone that just joined in. We're talking about how to invest 1,000, the exact plan, and I just wanted to make you understand that even with $1, you can start investing. You don't need a lot of money to start investing. Thank you all for tapping out the live. Really appreciate all of you tapping out the live so that we can get have a daily ranking right there. Developer Wale, Temple, Tutu, Vicky, Nuri, Eggboy, and every other person here. Thank you all for tapping out the live. So the thing about it is, a lot of times people want immediate gratification, right? What does this mean? People want to be like, okay, you know what? I earn my income and then I spend it. But there's something called delayed gratification, meaning that you're not spending you wait a little bit, right? We wait a little bit where you put your money instead of you using your money. This is your income, right? You use your income, you put it towards lifestyle directly. What do? You take some of that income, fund a little bit of lifestyle, put some of it towards asset, like the stock market. What we're talking about is like your 1,000, you put it towards that kind of thing, and then it start growing at 8%, at 12%, at 20%, and then you see your money grow. And thank you so much for the follow. You see your money grow. As your money is growing, you realize that once your money is growing, you just basically realize that, oh, you know what? Now your money is having babies. Your money is making money for you. And then the money that your money is making for you, that now funds your lifestyle. So it's a triangle, right? Instead of a straight line, which is income, lifestyle, income, lifestyle. That means that you continue to do work, right? Do the work to get the income, to do the lifestyle. That's what you'll be doing. Paying bills. It means that you are just working, trading your life to pay bills. But what should you do? You have a triangle, right? Instead of a straight line, it's a triangle effect, right? 8 to 20%. That's what we're talking about shortly. We're talking about 8% at the minimum is the S&P 500. Okay, 8 to is at S&P 500. That's the minimum, right? Now, so think about it. You have your income here. You have your expense, right? Your basic needs, your housing, your groceries, your car transportation, and of course your utilities. Those are the basic things that are here. Then you want to fund that, right? Remember, I did not talk about all of those big lifestyle here. just your basic need. Then after that, thank you so much for the follow, Fit Brown Woman, right? After that, you're going to now put the remaining of that money or majority of the money, right? So keep this one low. Majority of the money, you put it towards asset like the stock market, asset like real estate, asset like businesses. Assets are basic things. Whenever definition of asset is anything that puts money in your pocket, right? Liability, anything that takes money out of your pocket. All those expensive thoughts, all those expenses, anything that takes money out of your pocket is your okay, that's fine. That's fine, developer Wally. Yeah. Be okay. So, but asset is anything that puts money into your pocket. Always think about it. It's called cash flowing asset. It gives you cash, right? It's flowing, and then when it flows, you can now fund your lifestyle. So I give you a typical example of my own personal story. I wanted to buy a car, and because I wanted to buy a car, right? And I realized that, you know what, I cannot take my own time, trade my time for money and go use it to buy that car. So what did I do? I basically took that car, went to use it to buy a house, and use that. From there, start getting a rent from the house, and that rent I'm using it to pay the car. I have the house, I have the rent, right? So just think about it. But guess what? It required delayed gratification. You delay. You see, in between is the delay. That's what changes it from a straight line to triangle. So still have all of the lifestyle, but let your asset, appreciating cash flow, let it be a cash flowing asset. Let it be the one that is funding that your lifestyle. Okay, so the thing about it is that always think about it is the habit, right? And how do you see this thing that I talk about is a bad habit, is the lifestyle creep, right? Lifestyle inflation, lifestyle creep. You would have, everybody knows about that. You get salary, you also increase your lifestyle, because here, if your income is here, if your expense is here, you see this difference is what builds wealth for you. Because this difference that is in here, this income expense, right? This gap, that's what you would use to, that's your 1,000 that you see there. That 1,000 can become 100,000. That 100,000 can become, as much. It's a function of this gap, right? Now, if you had to, let's now go into it proper, right? If I have $1,000, I would really keep it simple, right? A lot of times when it comes to investing, why a lot of people don't invest is because they always think that they overcomplicate it, right? It's like, it's complex. I want to invest. Which stock should I buy, right? Which one should I buy? I don't even know the one to buy, right? And in the process of you doing that, you realize that you're already fatigued, you are tired, because you have so many other things to think about. Or which account should I open? I'm telling you the things that I get every single day. Which account should I open? Dr. Lina, which stock should I buy first? And I tell you, keep it simple, right? Keeping it simple and staying consistent is all that you need when it comes to investing. Now, with the $1,000, if I have this $1,000 and I want to invest two tech two index ETF. I'm not sure. Can you okay? Can you repeat that, Fit Brown? So the first thing I want to start with, right, is number one thing I want to do. I have $1,000 sitting in the bank account. It's giving me nothing, right? First of all, I want to make sure that it's even giving me something. BioBuild, thank you so much for joining. Thank you for tapping on the live. Think about it. If my 1,000, the first thing I'm going to do, right? You're coming out of here, right? I'll be so angry. The first thing is that I want to move it from one account to another. Because if it's sitting in Bank of America, Chase or Wells Fargo, I get 0.01%, which is $1, right? Which is actually 1 cent, right? 0.01% of 1,000 is 1 cent. So I'm moving it immediately. That's number one. That my $1,000, I am opening an IO savings account. What's an IO savings account? An IO savings account is your regular bank account, right? But you just get an higher interest in it. So like a bank like Capital One will give you 3.3%. A bank like SoFi Bank will give you 4%. What's it called? Vero will give you 5%. Or simply check what are the top IO savings account. That's the first that I'm going to do. So investing in the market, 2 instruments from tech sector and 2 ETF. now that is yes, that's what we're going to be talking about shortly. We're going to be getting that into that shortly. We're going to be saying which one are we buying, right? My $1,000. Right? So first of all, put it in my savings account, like I said, right? Typically what I'm going to be having there is just my emergency fund. Basically, that's it, right? 1 to 6 months of my daily my monthly expenses. That is, that's an emergency fund. For those that are new here and don't know what an emergency fund, that's for safety, protection, and of course, in case there's a job loss, there's an emergency, I have that taken care of. Now, once I've taken care of that, the second thing I'm going to do is open my brokerage account. What's a brokerage account? That is how you invest. Whenever you want to invest, you don't put it in the bank. It doesn't happen in the bank. It happens in the brokerage firm. What a brokerage firm? That is where you can actually buy and trade, buy and sell on the stock exchange. Either in anywhere in the world. You're in the US, you're in Canada, you're in the UK, you are in Africa, anywhere. You can actually open a brokerage account and start trading and investing in the stock of your choice, right? Or basket of funds of your choice. Okay. So, but then, am I going to be buying what? So I already opened the account, brokerage account, right? And I can give 3 accounts right here, or 4. If you're in Canada, Wealth Simple is there for you. If you're in the UK and in Europe, Trading 212 is there for you. If you're in the US, there is Vanguard, Fidelity, Schwab's. Thank you so much, Phil Brown Women, right? Fidelity, Schwab's, and of course, what's it called? Fidelity, Schwab's, and of course, Vanguard. Those 3. There's also Robinhood, there's Webull, there's so many of them, right? And whenever I say Wealth Simple in Canada, there are so many of them in Canada as well. And there's so many of them in the UK and, in Europe in general. And then you're in Africa, there is Stanbic IBTC, there's Bamboo, there is Investment One. All of this kind of investment. Basically, just go on Google or go on ChatGPT. Just the same way I said IU savings account for your IU savings account. Also type best brokerage account, read their reviews, make sure that your money is protected, because if you lose your money, there's nothing that is growing. So protection is the first layer whenever you're doing anything when it comes to this. So having said that, you basically have your funds, right? You have your account open. Now that the account is open, the second step is you fund your account with the $1,000. So we are moving the $1,000 from the IU savings account. We are moving it into the brokerage account. And as a matter of fact, if I'm also employed, I'm also going to be connecting my personal account, my income account, and I'll be funding every single time I get a paycheck. As they are deducting the taxes, I'm also paying myself by also putting certain amount, right, into the investment account, into the brokerage account every single time. But a lot of time people make a mistake here. They fund the account, but then they don't invest the account. The fact that you put money in the investment account, in the brokerage account, doesn't mean that it's buying automatically. A lot of people make that mistake. So please watch out. You fund the account. First is open the account. 2 is fund the account. Then the third thing is start investing, which is the investing plan that I'm talking about. So what are the investing plan that I do? I keep it as simple, consistent, easy, right? It's beginner, right? Easy as possible. Instead of me picking and choosing. Picking and choosing gives me one thing. If I pick one stock, my chances is a 50-50. I could lose it or I could grow the money, right? Anything can happen. I lose the money, I grow the money. I was doing individual stock, specifically penny stock, day trading, and options trading. I did that about 6 years ago, and I lost close to $100,000. And of course, I learned in the hard way. That's a very painful and most expensive experience in my life, where I lost money to the stock market just because I did not get education. Otherwise, I would have figured it out a better way. Now, what did I now do, right? Why am I still investing? Because that's enough to actually discourage anybody to invest. That's enough, right? Losing 100,000. I'm not saying 10,000. I didn't say 1,000, 100,000. So that's okay, right? It's a difficult lesson, but it's good, right? Because it's whatever, sometimes it's the mistake that you make, or all of those error is what builds you. It's a knowledge, right? It's a teachable loss, right? It's a teachable period. And that's how I still figure that not investing, thank you so much for the follow, not investing at all. No, like I said, penny stock, right? Fit Brown, it's penny stock, day trading, and of course, options trading. So you already know the three things where you should not put your money, right? Where you should not. It works for some people that have the time, but I have a full-time job. I had, it was a full-time job, and then being able to day trade and do all of that, you need to watch the chart, you need to, so in itself it's another full-time job. People that are successful at it, it's a full-time job for them, right? So, and I didn't realize that I was just doing that and whatever. So I'm not going to do that to that one. This is my $1,000 if I have to invest, and you will not do the same thing, because whenever the risk is there, the risk is very high. There's always risk when it comes to investing, right? But then you need to choose your risk. Are you high risk? Are you moderate? Are you low risk, right? So I was at the high risk, then I switched myself all the way down, humbled myself to low risk and medium risk. Now, what does medium risk and low risk simply mean? It simply means things like ETF, right? Instead of buying individual stock, I am buying a basket of funds, right? Instead of me investing in one stock that my chances of growing is high, or my chances of growing is low, right? I just simply buy multiple stock in one basket. What does this mean? Like I said, ETF, exchange traded funds, or index funds. And how did I get into this? How did I get about this? So in my process, of course, Dr. Lee never gives up. Even if I lose, I know that I'm still going to gain, right? So what did I basically do? I went and like, okay, where does there's the story that they said all the multimillionaires and the billionaires, they put their money in the stock market. If you go on Google right now and you search multi-millionaires, I did not say millionaires, multi-millionaires and the billionaires, where did they put their money? The first thing that you would hear, that you would see right there is, the first thing that you see right there would be, they would say either the stock or real estate, right? And then I put my money in real estate, I mean in stock, and I lost my money. So it means that yes, there's money there, it's just me not doing it the right way. I did it the wrong way. That's why I'm losing money. And that's why I lost 100,000. So how then do they invest that they do not lose money, right? But they are actually growing their wealth, right? And because whenever you see the multimillionaires and billionaires put their money, is either they know that there's money there, or it is something that helped them grow their money, right? It's just common sense, right? Is either is there something that is really, it's just like ants, right? When there's sugar somewhere, there would be ants that is all over the place. If the sugar is moved away, trust me, they're going to be moving towards where the sugar is right now. Just something like of that nature, just the same way. So for them to put their money, it means that there is something. So I needed to figure out what is that something. And then when I figured it out, it was something about diversification. Diversification is something that's going to help you where you are going to, this $1,000, we are not going to be losing it. We are going to be spreading our risk in multiple ways, in multiple sections. That's what we're going to be, whenever we buy this $1,000, a portion of it, we not just invested in one stock, right? That could lose or gain, right? 50-50 risk, right? That's it. But what am I going to be doing instead? I will do basket of funds. Variety is the spice of life. Like, in the basket of fun, you would, everybody will agree, is either who would rather take just bananas and eat bananas for the rest of their life, right? Or would you rather have, if you have to take fruits, just like a bouquet, you would rather have strawberry today, have grapes tomorrow, have bananas, have passion fruit, and all of that. I want to believe that everybody will prefer having that basket of funds rather than having it as eating the same thing every single time, okay? And that is just it, right? Whenever it comes to investing, whenever you buy a single unit of an ETF, you are investing in so many things. And whenever you hear ETF, I know a lot of time people will just think ETF. Yes, do you mean S&P 500? No. ETF simply means exchange traded fund. So it's a fund that is managed by different companies, right? Different brokerage firm, and then they identify the kind of stocks that individual stock that they're going to put inside that basket, and then they charge a very limited, a unique fee because it's already is off the shelf. It's not is off the shelf. It's not something customized by you for you. If I start by my account with $20, can I increase them? That I'm absolutely, yeah. You can see, like I said, absolutely, you can increase your at any time. You can start with $1 and be, set up your account every anytime. It's just like I'll ask the question to you, Opal. So the question is, can you increase your money in your bank at any time? If you put $20 in your account, in your bank account, can you increase that at any time? Okay, right. I believe is yes, right? You can increase. That's the same thing. Just the same thing. You can decide to be getting your paycheck in that account every single quarter. Every single paycheck. That is it. Basically, just think about it. Whenever you're thinking about a brokerage account or investing, just thinking about it like a bank account. The only thing is that instead of the bank account, right? The money is just sitting there. With investing, with invest ownership of different companies, that's what you buy. And also think about it, it's almost like you're investing, but you can also get your money immediately, right? It's like you can trade it within it once. It's just like when the bank is open, you can withdraw your money till 4 o'clock or 5 o'clock, depending on where you are, right? You can return and withdraw, but from after 5 o'clock, you cannot withdraw your money except you go to the ATM, right? Or to, just to withdraw it. That's the same thing with the stock market. You can get your money buy during the trading window, which is till 3 p.m., right? Then you can sell within the trading window and withdraw your money. You remember the accounts where you are funding the money from, just transfer the money straight into your account, get your money right there immediately. That's how easy, not complicated, not complex, right? It might sound, but not complex at all, right? You can get your money at any time. You can invest any amount. You can do it consistently. You can, yeah, basically, that's just it, right? That is just it. So the thing about it is that ETF, basket of funds, right? Basket of stocks. Instead of individual stock, you're doing multiple stock. Thank you all for tapping out the live. Thank you all for tapping out the live. Thank you all for daily admin. Thank you for the follow. Thank you for sharing the live as well, so that you can invite your friends and your families and your enemies to come and learn this, because everybody wants money, right? Everybody wants to build wealth, either generational wealth, either thank you so much for the repost thing. Really appreciate that. Thank you all for tapping out the live. Everybody wants to grow wealth and build wealth for themselves. Even the Bible says a wise man leave inheritance for his children and his children's children. So you are not just leaving inheritance, you are also enjoying it while you are alive, right? That is it. So always think about it that way. All right. Thank you so much. I said fact. Absolutely. Absolutely. I'm very passionate when it comes to, the younger generation coming, so that they don't get it wrong. Build generational wealth. 4 level, 6 level of generational wealth. Awesome. Let's tap out the live. Let's share out the live. Let's invite a friend. And thank you all for the daily admin. Thank you for the Go Populars. And you should really appreciate that. So ETF is just a basket of funds in housing stocks, right? And if I have to invest my 1,000, that is where I'm going to be putting my money. I'm not going to be putting it in individual stock, understanding that I'm not going to be leaving it in the bank. No, because it gives 0.01% and inflation is at 3.3%. So I'm losing at 3.3% and gaining at 0.01%. So negative of 3.299. That's what I'm losing right there. As Mabino, thank you. Maboni, thank you for the follow, right? I'm not going to be living in the bank for sure. Then the second thing is that I am not going to be buying individual stock, because it's a 50-50 chance. I could lose my money, I could gain my money. If the company is performing well and it grows, I make money. If the company does otherwise, I lose my money, right? I have lost money through this means in the past, right? And I'm not going to do that again. Now, the third one, I'm going to go through the smart way. It's called the smart investing method that the multimillionaires, the Warren Buffett of this world, right, uses, which is index funds and ETF. Basically, basket of stocks. And if you are just meeting me, I'm Dr. Lina. I'm Doctor of Business and Technology, and I help professionals turn their 9 to 5 income into real wealth. Wealth that is you enjoy it and it is also generational. That is what I talk about. All right. So having said that, now you have this income inside. I mean, you understand that the first thing for you to start investing in ETF is, number one, open your brokerage account, right? Then number two, fund your brokerage account. Number three is to start buying the ETF. What are ETF? Basket of stocks. Basket of stocks. So think about it. You have Coca-Cola, you have Amazon, you have Nvidia, you have Procter and Gamble, you have so many of those companies that you love, right? But instead of you buying them individually, whenever you invest in this basket, right? Either 500 basket, either 1,000 basket, 2,000 basket, or whatever, you are buying everything just with your $1, your $100, your $1,000. It takes any amount that you can, that it takes, that's what it takes to start. Like I said, minimum. I mean, it's not even minimum. With $1 you can start buying it, because you can buy fractional unit of ETF basically that way. Awesome. So having said that, so what are now this in the what are the favorite, the popular ETF? So we have like the S&P 500. Thank you all for tapping out the live. We have the S&P 500, very popular, the top 500 companies in the United States. Why is this one very popular? Because using the rule of 72, your money will double in less than 7 years with the minimum, which is right minimum, which is about the minimum. It has the trend. It has a trend of return. It has returned close to between 8 to 12% for the past 30-40 years. Wow. Averagely, last year it returned 18%. So what does this mean? It's jewels, right? Yeah. What does this mean? 18 to, it mean 8 to rule of 72. That's jewels. Yeah. Okay. At least I know somebody that knows rule of 72. So you know that it's not me. I didn't create it. It's just like compound interest. It's just like 1% rule. It's just like all of those kind of things, right? I did not create it, right? Thank you so much, Sweet Brown Woman. Thank you so much. Really appreciate that, right? The rule of 72 in less than 7 years. So you've been wondering, I want to double my money. I have this money and I want to double it in less than 7 years. According to the rule of 72, it takes usually the rate of return, because it's a function of the rate of return. It's 8 to 12%. 18%, all of that goes into the number of years that it takes for your money to double, right? So think about it. With the S&P 500, reason why it's popular is it has the trend data for the past 30-40 years, averagely. So it means that when I say averagely, emphasis on average, right? There are times when it drops 32%. There's a time when it drops 4% a year. Last year, it did 18%. Okay, so it means that if I put my $1,000 or in S&P 500 last year, I would have got a cool $180. $180. If I put it in Bank of America, I would have gotten a cool 1 cent, 1 penny, 1 penny that you used to do the daily admin, or you used to buy Go Popular. 1 cent. You cannot even do all of those gifts. Like the minimum, barest minimum is what you get a whole year. Isn't that ridiculous? Like ridiculous. I'll take 180, right? Dollars. That is my money giving me money, right? That is the minimum. Barest, it is 18% last year. There are times when it does 4%. But because this game is not short-term game, not get rich quick game, not gambling, not hypes. This is something that is steady, right? You want to also do the long game. So you are not going to be, it's not a day trading thing. It's not a penny stock. It's a structure that is solid. So what does that mean? You want it to be there for another, you want consistency. You want it to be there for another 5 years, another 10 years, 3 years, whatever. You want to do it that way. And then you are putting money in there consistently. That is how you build wealth. So if I have to put my $1,000, S&P 500 is one of them, right? Because it has the data, it has the trend. I know my money is safe. If it has returned average 8 to 12% in the past 30, 40 years, it's not going to be now that it's going to be, it's going to lose money. As a matter of fact, and you're wondering what's the ticket symbol, you can simply Google, you can simply go on your brokerage or whatever and just put S&P 500. He will give you the different one. So VOO, right? There are different kind of S&P 500, pretty popular, different kinds. S&P 500, it's about who owns it, who manages that fund, who is the brokerage firm that manages it. So for Vanguard, the popular VOO is managed by Vanguard. Vanguard is a brokerage account, right? It's a brokerage firm which you can actually open. You do not have to, you can buy it, you can buy a VOO from any brokerage firm, but who owns that particular fund of S&P 500? It is basically Vanguard, right? Vanguard can be is a brokerage firm, but they own that portfolio, they manage it, and they charge you of a fee of a 0.02 or 0.03. So if you are one of those people that also you make good money, you have a managed account, they are managing your account for you, go and look at the fees, because managed account, the fee structure is between 1 to or 0.75 to about 1.5%, which is a lot of money versus when you do, like the customized one, not customized, the standard one, because the standard, anybody can buy it, it's going to be 0.02, 0.03. So you could be paying thousands of dollars versus paying less than hundreds of dollars using this method, right? And then it has a track record, right? And you might be returning the same amount. As a matter of fact, I tried it with my managed account with JP Morgan. I tried it where I said, you manage this account for 1 year using the same amount, and I put the same amount in a VOO, SPY, and IVV, because those are the three that tracks S&P 500. Trust me, this one did almost the same thing, because everything that they have in my managed portfolio was individual stocks of the same S&P 500. It did the same thing, but on top of here, I am being charged 1% to 1.5% in management fees. So you'd realize it that way, because at times when you do that, you realize that, well, she just put money back in her. Yes, and I just take money from your stock advisor, right? Your investment advisor. Yes, but do the analysis. Take knowledge is power. Thank you so much, Fit Brown. So basically, you can do the same thing. If you let's say you have let's say you have $20,000. Tell your managed it's being managed right now, right? It's being managed before you. Do it. Take 1,000. Tell them you're going to take 10,000 and you're going to manage that one for 1 year, and let them manage the 10,000 for you. Put it in an S&P 500, put it in an Nasdaq 100, split it and all of that, and then see the result. Yes, basically, yes. So the S&P 500, we have VOO, we have SPY, we have IVV, right? They all track S&P 500, return about the same thing, 17.9, 18.1, thereabout last year, and all of them, the only differences, right? One is Vanguard is VOO, State Street is SPY, IVV, I think that's BlackRock. That's just the only difference, but they track the same thing. And what is S&P 500? S&P 500 is top 500 companies in the United States at point in time. Point in time, absolutely important. It means that it's not like you get there and you remain there forever. No. Yeah, all track S&P 5. That's correct. Thank you so much for putting that, right? S&P, it doesn't mean, it means that you are being reevaluated every single quarter. Your cash is being evaluated. Your performance, your goodwill, your asset, your liability, your cash flow, all of that thing is being evaluated every single quarter. So the fact that you get there, if another company is better than you, trust me, boom, you are booted out of the S&P 500. You are now top 1,000, which is another ETF, by the way, right? S&P 500 is just one ETF. There's top 1,000, S&P 1,000, right? You are booted into, and if you don't qualify again for 1,000, you become 1,001, you are booted out of S&P 1,000, and that's the way it works. Now, this is it means top 500 companies. That's why the multimillionaires and the billionaires put their money. It means that you are talking about the best of the best of the best companies, right? Globally, right? So companies like Microsoft, Google, Nvidia, right? All of these top companies are the ones that are in your S&P 500. So why are you going to fail? Even if you see, even if it reduces to 4%, if it does 4% in return next year or this year, know that the other year is going to do 32%. It means that if it's doing 4%, trust me, every other sector is doing way less. Companies like ExxonMobil, they are in this S&P 500, right? And you can decide to say that, you know what? I don't even like the S&P 500. You can buy ETF of the entire US stock market. The entire US stock market. That's VTI. And then you can say that, okay, I'm not doing VT, I'm not doing the entire, I don't love the US. You can do the international. You can decide to say that, oh, you know what? I just want to do the entire global market, VOG. Yeah, you can do that. You can just, as you can say that, okay, you know what? Because I am in the technology industry, right? I'm a vice president of technology, right? So I know technology is now, technology is the future, technology is then, right? AI is taking everybody's job. That's technology, right? And then think about, I need to record yourself. This is good knowledge and powerful. Yes, we would have a smart investing workshop, right? There is a smart investing workshop which is free on Saturday, and I'll provide all of the information. So you want to stick around? It's free. I think we just have about 5 seats left, by the way. So that one is going to be on Zoom, and everything will be recorded and all of that. So you want to stick around to the end so I can provide you with that information. Nivali Farabia, thank you so much. Said this is, good knowledge and powerful. I am glad you find it very valuable. By the way, I do this almost every day, except I get too engaged, and then I don't come live, right? But whenever I come live, I share this nugget as well. So you want to be back, you want to follow if you haven't followed, and I have even way more information, long form videos that you can binge watch and all of that. You would find it on YouTube. It's Money Talk with Dr. Lina, and on Instagram as well, it's Money Talk with Dr. Lina. So I am on all the platform because I want to be able to share as much knowledge, reach as much people, bless as much people, right? With this old knowledge that is missing, this knowledge gap in finances, right? Put it out there for as many people as possible. It's Money Talk with Dr. Lina everywhere. Dr. Lina is DR, and Lina is not Lena, it's Lina. You're welcome, Opal. I'm happy to do that. Thank you all for even listening to me as well, right? Because I can't be talking, if I have all this knowledge, if you're not here, there's nobody to share it with. So thank you so much for trusting me and sitting around and taking notes and all of that, and tapping out the live, sharing the live, and all the follows. So having said that, S&P 500 is just one, but it's actually an amazing tool. So for somebody like me that I said I'm in tech and all of that, I also teach, I'm also a professor, right, teaching AI, cybersecurity, and deep learning, right? So I know the value of technology. So I also invest in something called, somebody mentioned it earlier, Fit Brown Woman mentioned it, QQQ. That is top 100 technology company in the United States, right? Top, right? 100 right there. So you want to, spice it up a little bit, right? Spice it up a little bit. It's the QQQM. Those two are for technology, right? Because you have companies like Microsoft, so there's going to be an overlap with the S&P 500, right? Where are you in the US? I'm in Texas, right? There is, you might have in technology, and S&P 500, there might be an overlap in some of those ETF, right? So for instance, if you have energy ETF, right, you have S&P 500, which is Exxon. You have Exxon there. You also have it in top energy ETF as well. Like in the technology space as well. Do you use AI to invest? No, I don't. I don't even help anybody to invest. I don't collect money from anybody. No, I don't do that. I just tell you, I keep it simple. Like I said, I've lost 100,000, so I don't make investing dramatic, right? Because I've seen it doing all of those dramatic things, trying to watch that and all of that. I lost $100,000. Options trading, day trading, penny stock, I lost 100,000, close to 100, a little change less than 100,000. So at least that makes me feel good that it's not exactly 100,000, a little change less than above 90,000, but not 100,000. That makes me feel, whatever in my brain it clicks. Yeah. But then what I basically do is do ETF consistency, keep it simple, basket of funds. You are back, welcome. Do you trade and read candle? I don't. That's what I just said. I don't, because right? Like I said, I'm a vice president of technology. I also teach. He already tells you, and I do this to teach others. So my plate is already full. So where do I have the time to start reading Kandu and reading all the time? I don't, right? And all of this complexity is what, what keeps a lot of people get stuck and they never start investing. That's why I keep it simple, right? The ETF, it has the trend. I just watched the trend. The data is there, right? For the past 30 years, 40 years, S&P 500, I returned 8 to 12%. If I do it consistently, if I start putting if I put $100, 100,000, doing rule of 72, within in less than in 20 years or whatever, I'm going my 100,000 without adding anything more would give me $1.6 million, right? In 25 years or less, I have 1.6 million. So it's okay for me versus watching the candle and doing. I really don't have. I rather focus my energy on building more wealth, right? More capital to actually invest, right? I also invest in real estate. I'm a serial investor, invest with double-digit real estate portfolio. So that's another pillar that I teach differently from investing in the stock market, right? So that explains why I'm not watching candles for the people that just wanted to know. So I let compounding do the job, right? Yes. What investment can you do that will compound your money daily, daily, daily? Yes, all this compounds your money daily. S&P 500 compounds your money daily. You have compounding. Compounding, what is compound? Compound is the rate at which your money increases every single time, right? Based on the rate of return. The only thing is that it compounds at 8%, right? Annually. Between 8 to 12% annually. QQQM, like the technology ETF, compounds at maybe 18 to 20%, but averagely, right? Averagely. Because you could do 32%, could do 40% last year, and this year it does 5%. So it's average. So it's not daily, right? It is a compound is a function at which what the rate of return is, right? Basically that's what it is. Compound. So it still compounds daily, even if it's 4%, if it's 7%, it is done. It's basically daily, right? But if you just want something that is quick, you want it safe and all of that, you can open an IE savings account at 3 to 5%. You'll get your returns every single month at that rate. But I tell you, annually is a bad word in investment. Daily, monthly is better. Well, I mean, here it's about long-term investing, right? In long-term investing, as a matter of fact, we are not doing daily. I mean, we are not doing annual. We are doing so many years. So many years. Because guess what? A Warren Buffett, this is the strategy. The Lord of investing, the one of the most successful people when it comes to investing in the stock market. You can Google him. Is the owner of Beckenshire, Atterway Beckenshire, right? He's the one, and if you ask him, he will tell you long-term investing always supersedes short-term investing because you pay capital gain, taxes, and all of that whenever you do all those short-term trade, which is way higher than long-term trading, right? And then you can easily, with your 1,000, you can easily invest in multiple stocks at the same time. So S&P 500 is one. QQQM, for NASDAQ 100, top technology company. Another one that I also talk about will be something like SCHD. I want cash flow, dividends, right? I want all of that. Basically, that is its best 100 companies, right? With dividends, they've been paying dividends some of them for the past 100 years. Procter & Gamble is one of them. Johnson & Johnson is one of them. Procter & Gamble, I know because I worked there for 8 years. And it's been paying dividends even on my individual stock. Okay, all right. I mean, that explains it, but you also need to be careful, right? Invalid parameter, you need to be careful because now you're at 60, right? You're 60, you don't want all of those get rich quick scheme. Now it's more about protection, right? More is about protection than trying to get something really quick. You know what I mean? Something now is about you saving your money. Now you should be at the low to mid moderate. Never do something high because you are at the you don't have so much time in the market. Okay, so I need to accelerate my investment and anything. So basically, what I'm going to be telling you is it depends on depending on how much you have would be put some of them still in No, I don't see. I don't talk about all of these three things that you talk about. Is the things that I never talk about because those are like the get rich quick scheme with the high chances of you losing your money. IUL, that one you might not lose your money because I don't know so much about it because there's so many stories. There's so many when something becomes complex or when there's so many discussion around it, I try to avoid that conversation. I try to stay take my because I work too hard for my money. Anything that brings about conversations and people are not, because they will tell you that it depends on who opens your UL. That agent, if the person set it up right, then how do I know if the person sets it up right? Those are the things that's why I avoid IUL and I don't bring it into my conversation. Crypto, on the other hand, it went from 125, right, thousand to 75,000 overnight, right? Overnight. That's it. That's the other one, right? That explains it right there. It is super risky, right? I would rather say if you want to do any of those things, I would rather say maybe your children, if you have children, maybe you started with them because they have, even if they lose money, it's going to bank back. I know like a Bitcoin would still go up at some point, right? It's going to go up at some point. I know that for sure. But then if you're 60, you don't want a situation where you need the money because you need it for retirement. You're going to be out of paid employment at some point, right? So very soon, earlier than any other person that is in their 20s, 30 or 40s. So it's more of protection so that you have something for your retirement, you have peace of mind and all of that. That's what I would recommend for you, right? If you have to do a one-on-one with me or you are my client, exactly what I just told you, because you should sit on the low to medium risk. Even if you talk to all of the advisors, that's exactly what they're going to tell you, like bonds, treasury bills, put some of them in ETFs and all of that. That's what I will advise for you. Ensure that you have your emergency funds, right? And of course, make sure you max out what I would say, max out your Roth IRA, max out your 401k, all of those kind of things. Those are the things I will tell you at this stage of life, right? Those are basically the things I would. And if you have so much money, I would say buy a property, right? If you can buy it cash, fantastic, so that you get cash flow, right? That's the only other thing I'll add to it. I hope that answers your question. As developers say crypto is risky. Yes, I agree. IUL is index fund. Of course, I know what IUL is. You're adding insurance plus investment, right? Why don't we just put it aside? Right? Have your insurance, have your investment, period. Keep it simple, right? But for the people that is working for, I don't disrespect it, right? If you understand it, if you know it, that is absolutely great. And Mayobit said IUL can be a scam most of the time. See, those are the controversies that comes with IUL that makes me like, I wear white clothes, right? Where I come from, they say when you wear white clothes, please don't stay close to the oil, don't stay close to the blood because it could stain your white. So that is me, right? I've learned a hard way, losing 100,000. It's painful, but it's one of the best lessons that I've learned, an expensive lesson that I've learned that has built me in my wealth building and investment journey. Okay, that's why I can tell you this story, and I will tell you, do not do this, and I will tell you with my full chest. Otherwise, you'll be arguing with me. All right, absolutely. So ETF, back to what we were saying, QQQ technology, S&P 500. I mean, if you want to just take and run with it right now, those two, SCHD for cash flow, right? That's the other one. And of course, if you also want to add real estate into it, I do not put money into real estate investing, right? Into the REIT, right? Real estate ETF is REIT. I don't put money into it because I am very heavy on the traditional real estate. I own and manage double-digit real estate portfolio. So, and one thing that I always talk about is diversification. Hey, Stephanie, welcome. And thank you for the daily admin because I know that's the next thing you're going to talk, right? So, what's it called? So, you basically have to, yeah, you basically so if you want to know that if you know that you're going to definitely, if you're somebody like me, I love to diversify my portfolio so that I spread my risk across board, right? So it's ETF, real estate ETF is the other one. Why is that? Why is it that beauty shop and supply make bank? Well, I don't know. Honestly, I don't know. I mean, but I can give an idea. Beauty and supply. Men like women that are beautiful, and the women, you didn't understand that they look beautiful. Help us to, women are gorgeous, super gorgeous, right? Right? We are, we are made in the image of God and His likeness. We are so beautiful. So whenever we put the makeup and all of that, maybe that's why it's expensive, and the men will pay for it, and your spouses and all of that will pay for it. Basically, maybe that's why it makes a bank. But I don't know. I'm not one of the people with the heavy makeups as well, right? What ETF tracks beauty supply? We need to check that. You can put it on ChatGPT or Google right now, and boom, you would find it right there. You'll find it right there. But do the review, see the trend, right? See the trend of it as well. Okay, what has it returned? At least we have for S&P 500. Everything I tell you right now, there is a track record. Thank you all for the follow. Thank you for tapping out the live, and of course, thank you for sharing the live. Thank you for the daily at me as well. What? Okay. What do you mean by SCHD? SCHD is another kind of ETF. It tracks the top dividend paying company invest stocks, right? So that's where I said, remember I said Procter and Gamble, Johnson and Johnson. I think Coca-Cola is there as well. The top 100, these companies are paid dividends consistently. Some of them, they call them the dividend kings. They pay dividends consistently for the past 100 years. So like a Procter and Gamble, Johnson and Johnson are consistently paid, giving their and what is dividends, right? Maybe that's the question. Dividend is a form, it is a way that you actually do profit sharing with these companies. What does it mean? So think about it. Remember, we talk about S&P 500. You are returning, you're getting growth on your money. It's growth, right? Your money is growing, right? However, when it comes to dividend, your money is not just growing, but your money is also giving you, whenever they make profits every quarter, every month, you are also going to get so a little bit based on your investment, a little bit of cash flow on that particular investment, right? So you could be getting, so you probably would have heard some people that would say that, oh, I'm just living on my dividends, right? It simply means that their principal is still there growing, but on top of that, they are still paying them cash every single month, quarter, or year, right? Depending on their financial period or whatever. Anytime they make profit, they share it with you. They might say, okay, we made the profit, okay, this percentage, and everybody that owns a unit of that, or a percentage that invested in that company, would also get some profit. Basically, that is dividends. That's the beauty of dividends. Thank you all for tapping out the live. Another question. So SCHD is the company, is the ETF, just like we have S&P 500, like we have VOO. I think that's Charles Schwab, right? Charles Schwab dividends. That's it. That's the company, that's the brokerage firm that tracks this top dividends, right? Remember, the names that you're seeing of the dividends of the ETF is a function of who is the brokerage company that is managing that fund. Is it Vanguard? Is it State Street? Is it broker? Is it Investment One? Is it Stanbic IBTC? Is it Vertiva? It's just basically who manages that. Then what is the second thing is that what is in that fund? Is it energy? Is it beauty and supply? Is it gold? Is it crypto? Is it real estate? That is what determines the name and the what goes in there, right? Is it 1,000, top 1,000? Is it the entire US market? Is it international? Something of that nature, just to make you understand. So SCHD is Charles Schwab dividends, top 100 dividends paying company funds, basically. What are those degrees you have on the wall? Okay. My doctorate, I'm a doctor of business, doctor of technology. I have my master's in strategic business and also information system. I'm an economist, I'm a chartered accountant, and also, what else do you want to know? I'm a certified information manager, CDSP, privacy. What else do you want to know? What else? PMP, all of those certifications, all of different certifications. So it's just a few of them right there. I have some on the other side of the wall. All right. But of course, the top of the top is the doctorate in business and technology information system. What else again? Okay, yeah. All right. So those are the four. Those are the four. So if I have to take my $1,000, my 1,000, what food do you? Okay, now you're okay, invalid. All right. So whatever food do you eat? Okay, basically, have you followed? If you haven't followed, follow, do that. So $1,000, if I have to split it, right? Because I'm going to split it, I'm going to spread it. My $1,000, I'll put $500 is S&P 500 because it's pretty solid. It's my heart is not going to be beating so much because it's going to be like all stable, right? All stable, right? Right there. Okay. So at 50, I'm going to be putting $500. I'll put maybe like $200 to $225, $250 on my QQQ, right? My technology. Remember, I'm a professor of technology, so I know AI is the future. AI is he's here, so I know that. That's because I am also, because I'm in the technology field. But it is return, statistically, is return between 18 to 20%. But, the higher the risk, the higher the return, right? The higher the risk, higher the return, basically. That's what that is. Now, I would also add the SCHD because maybe at 10%, it doesn't grow as fast, but then I have cash flow, right? Cash flow. So whenever I want to buy a purse, right, I put my money in the dividends and then, when it returns the money, then I go buy my purse. It's called delayed gratification. That's how you fund your lifestyle. Your asset will pay for it. All those private jets that you see, that's how they do it, right? Because they are basically, you have already invested in investments, and that investment, whenever it returns money, that is when they start using it to fund their lifestyle because they are delayed gratification and now they're enjoying their life. Okay. And then the last one is that I'll put is real estate for people that you, as a beginner investor, all I have is $1,000, right? I cannot go and buy a house, right? I would rather prefer to buy a real building, right? Buy a property, but it's $1,000, so I will buy a REIT. Either 5%, 7% of that money is $70 or whatever, and then I can put $30 on, a Procter and Gamble that I said I worked for 8 years, or any of those. I can just buy a little, right? $10, $5, and then call it a day. My $1,000, I have invested successfully with what I've done here. I've successfully invested in 800 companies. Diversification, that's it. And the only thing is that on top of that, I'm going to be doing it consistently. Invali said, what? Okay. How do I start? Crinking, Robinhood, basically, just Google. And for everyone, let me get to it since you're already asking. For everyone that is here, if you you might feel that, okay, all this thing sounds good. I know it's good, right? It's good. Yeah, put yes in the comments. It's good. You find it valuable, it's helpful, it's good information. Put it in the comment. Put it in the comment. Thank you so much for the follow. Put it in the comment, and you have not followed, put it in the comment. You find this information helpful, you see, or it's not good, it's bad. What's your, based on what we just talked about, you rather do it, find out another way. It's great. Okay, it's great. Okay, perfect. All right. Okay, how do you buy? Perfect. All right. So I know that this question comes every time. It's great. Awesome. Okay. Somebody, the person, major of wisdom. I want to believe, right? Major of wisdom. I wonder, how do I buy? It means that it's good information, right? That it means that it's good information. If you are not follow. So this, how to go about it. See, you click on here. It's free registration, right? It's free, but registration is required. This Saturday, how to go about everything. You want to open the account. Which account should you open? And I'm going to go for people that cannot attend, or you don't just want to register. I'll still give you the information, like a summary of the information. But you want to go in depth. You want to do it hands-on, right? Like I said, it's free, but registration is required. I think we have just 5 seats left right now. So it's here. You would see it right here, nestyou.me. This is my bio. And those on YouTube, you'll find the same thing on YouTube as well. Just go to my bio, right? Click on it right here. You would see and click on open anyway. It will want to trick you. Click on it, open anyway. And you would see it right here. It's the smart investing workshop, how you can turn your income into real wealth, right? Because that's what I teach, right? If all you do is with your income is to fund lifestyle, you see that you just keep working without funding, trading, you'll be trading your time for bills, right? Click on it, and then you would find this, go all the way down, and you click, you can see it's $0, right? It's $0. It means that it is not actually free, but it is free right now, right? That's what it means. So you might see that price change, then you click on buy now, and you would see it just ask you for your name. And so if anybody wants to take it, I think we just have 5 seats left. It's in the workshop. And once you register, you get an email regardless, because you can do this anywhere in the world. You are in Africa, you are in the US, you can invest in your own country, the ETF within your country. You can invest in the ETF in the United States, right? You are in the UK. And just to explain it for people that are, so one thing, 3 steps that you need to do, or 4 steps. One is you open your account, right? Which of the accounts? For those that are registered, you will find the list of everything. But on the, if I can give you one each, right? If you're in Canada, Wealth Simple, that's a brokerage account. You're not using your bank account. Brokerage account, right? Wealth Simple. If you're in the UK and you're in Europe, there's Trading 212. If you are in the US, there's Vanguard, right? The owners of VOO. There's Fidelity, right? There is Charles Schwab. There is Robinhood. There is Webull, right? And then if you're in Africa, you're in Nigeria, you have something like, you have Investment One, you have Stanbic IBTC, you have Bamboo, you can buy it from there. Ebony, welcome. Tessa, welcome, and every other person. But if you are in other countries, once you register, you would get it's a list. So you should get an email, please, for all of the people registering. Confirm that you get an email. You will get an email, right? With that email, you would get in the email, it has the list of so many of these brokerage firms. I am not affiliated with any of them in any way. It's for you to go there. Hey, thank you, sis. Welcome, welcome. Thank you for joining, right? Hey, the Health Bob with Dr. T. Welcome, welcome. Thank you for the daily admin. Welcome, welcome. So good to have you here. So that is how you register. So, so the first thing is open your account. Like I said, you get an email, right? Yay. You get an email, right, with the list of all of the different countries' brokerage account. I am not affiliated in any way. This is educational for you. It's not your investment advice. Whatever I'm telling you is for you to educate you. Once you do that, you are supposed to, between now and Saturday, it's May 2nd, which is this Saturday, right? By 12 noon Central Time, this Saturday, you're supposed to, you try to open your account between now and Friday. Then in the workshop, we will talk about how to build your portfolio. We talk about automation. We talk about every other thing to get you started. How to fund your account. If you can fund your account before the class, that would be absolutely even amazing, so that you have everything ready inside the, it's a workshop, it's not a training. It's different from the real estate bootcamp that I had earlier, which was a training. This is very hands-on. By the time you're done, you're supposed to come out, know exactly, have clarity in terms of your investment. So I think we just have 5 seats left, right? But if if it keeps coming and you are able to get through, that means you're lucky it's coming through. So, and I will show it one more time for people. And if you are in any of the regions, so you are in Asia, your country is not listed, it's not in the email, you want to send me a DM, right? Or you can just go on Google, what's the best brokerage firm, read the review, and from there, boom, just open the account. Don't overcomplicate it, right? But if you are in any of those countries, you have, click where? Oh, okay. See, this is bio. Invalid. I hope you have followed me, because if you haven't, and you're following across all the platform, all of the platform is what you're following, right? But you're such an interesting being. Thank you so much for the gift, Dr. T, Doctor, our doc in the house, all those people that do the medical things, right? So click on it. This is my bio. Let me go back. For my friend, invalid parameter, right? So this is my bio. So you can step out right now. Right there, if you go there, you will get into the landing page. That's my bio on my page. Once you get there, and those on YouTube, the same thing, right? Those on YouTube, right? You would find it on the bio on the YouTube. But this is the TikTok bio. So you click on here. That's the bio, and then you would see it. It will try to trick you to keep you here, but just click on open anyway. Click on that. Then you would see all of the different products that we have, all the different services that we have. See, the first one here is the Smart Investing Workshop. How to turn your income into real wealth. Because if all you do with your income is lifestyle, or you're just saving it, it's never going to grow and you're not going to build wealth. So you click on it. All right. Then it's going to bring this my beautiful picture. You already see there's the review from some of the people that have registered already, right? So you'd see, you go all the way down, you see, click on buy access. Right now, you see it's at $0. So the $0 could be, it means that if it's $0, it could have been $1,000. Can I resell your content? Okay. Yeah, when that time comes, send me a DM. Okay. Yes, you can resell. Then click on this one, right? You click on this, buy access, and it will ask you for your name, for your phone number, and your email. Register that way. That's it, right? That is it. What do you think about investing in gold mining ETF, considering our good number is increasing? Yeah, we just look at let's look at it. I don't know if you registered, it's something, let's look at it during the workshop. We'll just analyze it and just look, take a couple of the gold mining ETFs. Let's see the trend. What has it done in the past 10 years, right? What has it done year to date? What did it do last year, right? And then we'll be able to analyze it and just determine which of them and what is the fee structure, because you always need to think of what is the fee associated with it, right? It might be a good one, right? There's so many ETF. A lot of times it's just like we always say, oh, S&P 500, S&P 500, but there's so many other good ETF that people are sleeping on, right? And the good thing about ETF, right, it's because it helps diversification and your risk is pretty minimal. So we have I think we have just 5 seats left. Just 5 seats left. Once you register, I'm going to get, you would get an email. Are you also a content creator? What do you think? What do you think, invalid, right? What do you think? So once you register, you would get an email. It is important that you follow through with that email. And let's keep tapping out the live. Let's keep tapping out the live, okay? Let's keep tapping out the live and sharing the live. I know some people stepped out to go register. Like I said, it's free. It's on Saturday. It's everything that you need to know. You see, all of this that we are talking about, it's more of execution. So most of execution, make sure that in everything that you do, don't give anybody your money to invest on your behalf. So I've answered my question. Okay. So the question, what I said was, it might be a good one. And we'll analyze it during the the Smart Investing Workshop on Saturday, right? Bring it up again. I don't know if you have registered. If you have not registered, you want to do that so that we can analyze it. We'll look at it. Or you can analyze it yourself. Just simply, Google or check what are the top mining company ETFs, right? What are the top mining company ETFs, right? Then once you have that, then look at what is the return in the past 10 years, 20 years, right? And then also check what is been the return year to date, and then what's been the return in the past 2 to 5 years, last year and 2 to 5 years. That's going to give you perspective of what is it returning long term, medium term, and short term? And then you can be able to take a decision based off of that. I need to create content on algebra and calculus to resell. That's great. That's great for you. That's great for you. Because I have gold digger doing 79 gold ETF doing 79% in the last 1 year. That's great. That's why I said one of the things I said is that there's so many other ETF that are doing well, right? That a lot of people are sleeping on, right? And we'll be talking about some of those, right? But the thing about it, we also need to look at the risk, right? Because they're also a function of your age. You're also a function of your age, a function of so many things that goes into it. Okay. All right. So I'll be wrapping up now. So like I said, the training is free. Registration is required. So basically, just to keep it simple, start with with my $1,000. I'll open my account. Number 2 is that I'll fund my account. Number 3 is I keep it simple, start investing immediately, buy ETFs, right? And then number 4 is going to be I start automation, basically. Automation, right? That's basically, and most importantly, focus on long-term growth. If the stock is going down, if it goes down, so far you have the trend based on what I just said right now. You have the analysis, you have the trend, you're sure of what it's doing for the past short term, mid term, long term, then you don't have any reason to panic. Do not sell. Even if you see all of those things, it's just paper loss. Okay, it's basically paper loss. It's not until you sell it that is when it becomes real loss. So whenever you see it, you're looking at it, I'm like, oh, you know what, everything is red. Oh, I'm losing $2,000. You're not losing anything. It's until you sell it that is when your loss is actually sealed. But guess what? Was it 3 weeks ago? S&P 5 VOO was, some people were in this life, right? It was at 585 or 575. And somebody was like, oh, maybe it's going to go big. That's because of the Iran war, right? Somebody was saying that, oh, it might still go low. I'm waiting to, right now, is at the top of, it's gone back to the regular. It's even, is way off the market right now. It's all-time high. I think it's at 645 right now. Guess what? I started buying that same investment when it was 285, 275, right? That's when I started buying. Right. So that's the way you invest, and that's how you grow your money. Right. Get rich quick scheme. It helps, but it doesn't build your wealth long term. Okay. It doesn't build it long term. How do you mean about automation? What do you? Yes. So set it and let it do just the same way. Automation, basically, automate it and let it do the buying. Let it do the selling. I mean, not the selling. Do the buying. And do the funding and all of that. Okay, so like the automation when it comes to investing. Okay, so always remember one thing. Always remember, I just wanted to long-term consistency. Those are the key things whenever it comes to investing. You want to invest your 1,000. Let it think about consistency. Think about safety. Think about long-term. Like long-term will always win, right? It always win. Of course, you can make 75% and all of that. You can do all of that, but then be consistent with it, right? Be consistent. Remember, every time you short sell and do all of those things, you're also paying a higher capital gain tax. So if you don't need it, why sell it? Because if it has the potential of going this high right now, if it's a solid stock, your choices thank you so much. Thank you so much. Right, your choices would be or your you realize that at the end of the whole thing you're going to be making so much more, right? You're going to be making so much more. Thank you all for tapping out the live. When you invest in dividend stock, if you don't sell, do you still file in your taxes? Yes, you do. You provide I just actually did. Remember I told you I had Procter and Gamble stocks, individual stock, because as part of my stock options as an employee, I've had some of them for more than 20 years right now. And with that one for close to 20 years, right? With those ones, I still need to, even though I'm not selling, even though I'm not looking at it, I just need to provide that fund. What's it called? I still need to provide it to my tax consultant. They know whatever they're doing. I leave the professionals to do it, but I always still provide that tax form. I think they give you 10, let me see, 10, what's the form?